Investor loans just surged 22%, but here's what the government doesn't want you to see. That's right guys, investor loans just jumped 22% across Australia. But don't celebrate yet, because while politicians smile for the cameras, what they're not saying is where this money is going and what it's doing to the rest of us. This isn't a housing recovery. This is financial gentrification on steroids. Because guys, investors are back, owner-occupiers are losing. And some states, they're sure gaslighting the housing crisis. This is what we're unpacking today. In this breakdown, I'm unpacking the investor surge and what's fueling it. Why certain states are investor magnets and others are bleeding capital. How this shift squeezes millennials and Gen Z buyers even further. Why this isn't sustainable and who will be left holding the bag. And what you need to do right now if you want to play smarter before all this blows up. Let's break it down state by state. Because I'm telling you guys, the investor tsunami has arrived. According to money.com.au, investor loans surged 22% nationally in the past 12 months. That's 192,843,000 new loans. And owner-occupier loans, you might ask? Just a 6% growth. Investors are absolutely cooking. According to CoreLogic, it confirms investor lending now makes up over 40% of new loans in New South Wales and Queensland. Projections show that we could hit 234,000 investor loans in 2025. And to quote Mansoor Sultani from money.com.au, he says, quote, "We're seeing more housing density in regional areas outside Sydney where new estates are offering strong opportunities." End quote. And from a cautious point of view from Brendan Coates from Grayton Institute, he quotes, "With rental affordability at crisis levels, surging investor activity risks sidelining home buyers completely." End quote. And guys, this is my take. Investors aren't dumb. They're just moving in counter-cyclical patterns while the rest of the country freezes. But here's the savage truth, guys. We're building a system where only people with equity can get more equity, while the rest of us gets evicted. So right now, guys, let's now break down state by state, because not every government is playing fair at the moment. At the moment, guys, in this video, we're going to talk about New South Wales is the leading gold rush at the moment. New South Wales has the highest investor loan share. About 41.7% of all new loans come from New South Wales. That's up from under 30% in 2020. New builds alone are up to 34% year on year. Average investor loan size, you might ask? It's $872,000. And I'm telling you guys, that's not mum and dad stuff. That's investor grade loans. To quote Mansoor Sultani from money.com.au, quote, "Investors are increasingly drawn to regional corridors, and we're seeing first home buyers join those red vests as well." End quote. And my take on this, guys, this isn't regional revival. It's a displacement with a veneer of progress. New South Wales is building investor playgrounds at the moment, while renters are sadly fighting over leftovers. Guys like you who are watching this at the moment. So right now, let's look at Victoria, the state that loves tax but hates investors. In Victoria, guys, investor loans rose by 10% this year, but loans for new housing dropped by 20%. Why, you might ask? Because Victoria is the most taxed state for property. I mean, we got stamp duty, land tax, you name it, it's a gauntlet. Again, to quote Mansoor Sultani from money.com.au, he says, quote, "It has the highest stamp duty of all states. Investors are voting with their wallets." End quote. And this is my take, guys. Victorian government is basically saying, hey, investors out there, please fix our housing crisis, but we'll tax you into oblivion if you try. And guys, this is how we turn investors away and fail renters. And in the midst of this, guys, meanwhile, Queensland is quietly becoming the investor capital of Australia. In Queensland last year, they saw a 26% surge in investor loans last year. That's nearly 46,000 home loans. And in construction, you might ask, they're up by 18%. And specifically land loans, they're up by 22%. And in terms of existing homes, in terms of refinance, they're up to 29% in Queensland. To quote old mate Mansoor Sultani again from money.com.au, he says, quote, "The Sunshine State is emerging as a serious hotspot for property investors." End quote. And guys, this is my take. Queensland is doing what every other state should be doing right now, which is to make it easy for investors to build, then get out of the bloody way. I mean, at the moment, it's not perfect, but it's working for Queensland compared to other states. But guys, you're watching this, do you want to know the real dark horse? It's WA, Western Australia. And this state is coming in hot. Currently, WA posted 35% growth in investor loans last year. In terms of land loan, they're up by 64%. 64%, guys. In terms of construction, they're up by 54%. WA saw the biggest jump in average loan sizes. According to money.com.au, they said, quote, "Investor demand has exceeded peak levels of the last lending cycle," end quote. And guys, this is my take. WA is finally cashing in on years of being overlooked. This is the revenge of the underdog state, guys. But for those of you guys that are watching this, don't get too excited because not every state is rising. In this part of the video, let's look at the other ones that's getting left behind. Let's look at South Australia at the moment, guys. Investor loans are up by 22%. But owner-occupier loans are down by 33% since 2021. And in terms of Tasmania, they're still 28% below its 2021 peak. And in the midst of that, investors are circling elsewhere but Tasmania. And according to CoreLogic, they quote, affordability constraints are real, but investor agility is reshaping the market, end quote. And guys, this is my take. When first home buyers retreat, investors don't flinch. They just hunt. And you know what I'm talking about, you bloody hunters out there. So right now you might be asking Q, who's driving all this stuff, all this craziness? Well, let's roast them. Number one, the pollies. The pollies are pretending to fix housing while silently begging investors to fund the shortfall. States like Victoria are taxing growth out of existence. And the so-called property influencers you see on this platform, TikTok, IG, YouTube, LinkedIn that I'm posting on, these guys are always hyping about, oh, buy anywhere while quoting 2021 stats. And the RBA guys, they're holding rates high. Yes, they did a few rate cuts, but there is still more coming that they could cut. And overall, guys, this is my final take. Investors are playing chess, especially my clients who are working with holistic lending. They are taking advantage of this knowledge gap at the moment in the market and playing to their advantage. While for owner-occupiers, they're stuck on the sideline with a monopoly board and a pipe dream. So for guys that are watching this, do you want to stay in a rigged system where investors eat first? Or do you want to learn how to play smarter, guys? This is what I suggest you do. Not financial advice, but I want you to book a 50-minute call with me or a 60-minute call with me where we deep dive into a holistic lending strategy where you work with my financial planners, my accountants, my respected buyer's agents that have been tried and tested and not scammers out there or the so-called property influencers. Let us help you build an A game for you to build a property portfolio so you can build generational wealth in your family. But hey guys, if you're not ready, just hit the like button, hit the follow or subscribe button to get more videos like this. And most importantly, smash the share button, share this to your mate because knowledge is power. And again, thank you for supporting this channel and thank you for watching another episode of That Property Roast, and I'll see you in the next couple of days.